Good morning, everyone. I think, well, we just touched 10:30, so I think it's time to get this webinar going. Thanks very much for joining us today, this sunny day, staying inside to watch this webinar. Good to know before we get started is, as you can see, the webinar will be recorded, not just the slides, but also my face. So everything will be recorded and shared with you guys probably tomorrow and otherwise beginning of next week. Cool. Well, my name is Ludo Karelse. You just saw a picture of my colleague Kimo, but actually it's me giving the webinar today. Yeah, Ludo Karelse. I'm a buying agent at Expat Housing Network. Been with the company for a little over 1.5 years. Started as a buying team assistant, now buying manager. So I've seen many parts of the company. If you decide to move forward with EHN, I'm also the person that will be helping you, especially in the Amsterdam area, to actually secure a property for you. I live in Amsterdam as well, in the north of Amsterdam, in a new build property. Used to live in a little small apartment which was built in 1850. So again, seen a lot of the different things there. So fully prepared to share my knowledge with you on that part. Well, I'm not the founder. That was actually Kimo. Before we get started, we have some polls today. And so I would like to start up a poll and well, get to know my audience a little bit. Let's see if I can launch it. There we go. I think everyone can see it. So we'll start it up for a minute or so. Feel free to fill it in. It's of course not obligated to do so, but it's always nice if we can tailor the webinar a little bit towards our specific audience. So a few questions, where you are, what your household is like, how old are you, etc., etc. I see some nice numbers coming in. A lot of people between 25 and 34, perfect for the transfer tax exemption. Most of you will probably have heard of it. Still some numbers coming in. Nice. Cool. All right, I'm going to end it so we can get started. I'll share the results so everyone can see it as well, what kind of people we're working with today. I'm going to stop sharing there. Cool. All right, well, before we get into any further details, we believe that greatness is achieved in the agency of others. What does that mean? Is that I don't run the company by myself, but I'm doing it with my lovely colleagues. We have Philip here today for you guys to know. If you do have any questions during the webinar, please feel free to put them in the Q&A. Philip will be collecting all the questions, answering them during the webinar and also afterwards. So if there are any questions that are still remaining or applicable for the majority of our audience, then we will save them up for later on. The majority of the questions will all be answered. But as you can see, I don't do it by myself. We do it with a lot of international colleagues. I myself am from the Netherlands, but I've lived in the US. But we have Katie, who's from Cyprus, Giovanna, who's from Brazil, Rafaela, also from Brazil, Ellen, also from the Netherlands, but actually used to live in Thailand. Well, Rick is also from the Netherlands, but used to live in Colombia and South Africa. And of course, Philip, who is from Belgium and thereby speaks Dutch, English, and French. So everything we need in one big team. As you guys know, I'll first move on from this part. So again, a brief introduction from EHN. We always say that we're not traditional real estate agents. Why do we say that? To be honest, this is one of the things that the founder always says. In all honesty, the work that we do is very similar. But the thing that makes us very different from traditional real estate agents is, first of all, that we don't charge a commission. We charge a fixed fee. We think it's a little bit strange that if you are buying a more expensive house, then you also have to pay us more. While really the work is going to be very similar. Besides that, as you just saw on the previous slide, we are all expats or have expat experience. That means that we know what it's like to move into a different country. We know that it's can be very difficult and very daunting to all of a sudden enter a different system, different, not speaking the language, different legal system, things like that. So it's very nice to have someone on your side who has gone through that process. We do two things at EHN. We help people buy a property and we help people rent a property. We are specialized in these two things. We don't sell properties and we don't let properties. The benefit of this is that we totally focus and our expertise is totally on the helping of securing of homes. And as you guys know, it's much more easy in the current market to sell property or to rent out a property than to actually buy a property or rent a property. And for a lot of agents, they therefore don't spend a lot of time in helping their clients buy a property or rent a property because the turnover is just less quick and the ease of getting some earnings out of that is also lower. Like I mentioned before, we charge the fixed fee, so no commission. You know exactly what's going to go down and no surprises there. Like I mentioned, we know what it's like to sell in a new country. Some added value from EHN is that they take our offers more seriously. We are a agency known throughout the Netherlands, and therefore they know that if they receive an offer from us, that we have done our due diligence. Benefit from working with a buying agent, that it's sometimes possible to book viewings when a person without a buying agent is no longer possible to do so. So selling agents sometimes have slots within their agenda where they just book viewings for people with a buying agent. So we'll come along and then they'll view the property together like that. Of course, we have a lot of expats in our team, but we also have a lot of Dutch speakers, just like myself, and therefore we support by reviewing all the Dutch legal documents and property documents. And I think one of the most important things is that we help define the market value through market data. We'll come back on this a little bit later on, but do not forget the word market value, very important. We will inform you about rules and regulations, and we make sure you don't make the same mistakes as we did when moving to the Netherlands or moving to another country. This is what I wanted to say before. I'm not here by myself or just with Philip. We are here with a mortgage guru as well from Mr. Mortgage. We're here with Robin. Robin, would you like to explain a little bit about why you're here and what you do?
Sure. Thank you for the very kind introduction. I'm Robin, the second from the left, Robin uit de Hagen. If you're wondering how to pronounce that, it's not the easiest name. Typically Dutch. I was born and raised in the Netherlands, but have very much a lot of international experience, same as my colleagues, even whether they lived abroad, they are living abroad now, for instance, or where they grew up. So that's the team. We're expanding as we go. So that's very nice to be able to have a good team to support you in the whole process of buying and financing your property. So what Ludo already mentioned is that that Expat Housing Network guides you through securing a viewing. They will guide you with determining a bid that you want to put in. Especially Ludo is very good in estimating property values even. Be sure that you use that service as well. What we do is we let Expat Housing Network do what they do best, and we do what we do best, and that's the financing part of this whole process. Essentially, from start to finish, from the moment that you're considering buying or renting property, we'll let you know what makes sense. We'll walk you through the whole process, take you by the hand. It can be a bit of a maze out there. The Netherlands and the Dutch authorities and banks like paperwork a lot, but don't worry, we'll walk you through that all. Everything will be in Dutch, but we'll obviously supply you with translations. We do things a bit differently from a bank, by the way. So a bank has one product that they can offer, and we work with over 35 banks. Each of them have 2 or 3 different options really. So then we have a range of around 110, 20 different mortgage options that you can choose from. So that means that you have more flexibility and we can give you the best deal out there. So that is our goal in the end. We have a sole focus on you. We're independent from anybody and everybody. So we just want to make sure that you feel comfortable in the choices that you make. So that's what we do. I'm joined with by my team of Cesar. Cesar Yumas, being my fellow financial specialist, the same as Özkan. Özkan mainly takes care of the mortgage application and is kind of the the mortgage Google, if you will. If you want to know anything about any little particular reason, ruling, or whatever, he knows everything. So that's very good to have that as a backup. And Egle, our growth marketeer, helps us getting us out there essentially. So that's what we do. We also work on a fixed fee, and we'll talk about that a bit later as well, just to let you know exactly what your range is and what the possibilities are.
Perfect. Thank you very much for that introduction. Well, now you guys know who I am and who Expat Housing Network is, and you know who Roman is with Mr. Mortgage. And I think it is time to add some value to you from an information perspective. That is why we say the goal is also to add value, and we believe in sharing that freely, as it can be daunting enough. It doesn't hurt to get some more information. Some things that are good to know. Maybe we can start with you actually, Robin, on this part, the NHG.
Sure. NHG is short for Nationale Hypotheekgarantie, or translated National Mortgage Guarantee, indeed. That's why the abbreviation doesn't match, but that's a Dutch abbreviation. So what it means is kind of an insurance arrangement. And how it works is that when in 2021, so last year, when you bought a house up to 325,000 euros, you could opt for this insurance arrangement. Over that amount, it wouldn't apply anymore. What that means is that essentially it came into place with the financial crisis over 10 years ago now. And what happened is that people had a mortgage, then they had to sell their house because they lost their job, for instance, or they got disabled, for instance, and they couldn't pay the mortgage anymore. If you then have to sell your house, but the mortgage that's outstanding is higher than your the value that you will get for the property, you have a problem, right? So then you have a remaining debt. Then that's worse on top of worse, really, because you already have to sell your house because you cannot afford it more, because you lost your job, and then you also have a remaining debt. And that's where National Mortgage Guarantee comes in. They will pay that debt for you. They don't only do that out of the kindness of their hearts. You will have to pay a one-off fee at the start, which is 0.6% of the mortgage amount that you take out. So that's basically the benefit, the main benefit from National Mortgage Guarantee. One additional benefit, which really makes sense, because right now we can see property values increasing, maybe a bit less so, but especially in the Amsterdam area and the larger cities, there's still a slight increase. We have to see how that will stay there, of course. But what happens is you repay on your mortgage, you have to repay on your mortgage, and the property value, with a bit of luck, increases a bit. So the risk of actually having a lower value than the outstanding mortgage is smaller and smaller. But what the actual additional benefit of NHG is that they will charge you a lower interest rate. The bank will charge you a lower interest rate because you pose less of a risk, because you have this guarantee. That's essentially the background. So one is that if you have to sell your house for a lower amount of outstanding mortgage, the NHG will be able to pay the difference under conditions, and you get a lower interest rate. So those are the two benefits. Now, this amount of 325, and now in 2022 is 355, is based on the average selling price over the last couple of years. So that's what it's based on. So right now, if you buy a house for less or equal to 355,000 euros, you can opt for National Mortgage Guarantee. If you buy a house for 355,001 euro, then you wouldn't be able to apply for NHG in any way. So it's not up to that, and anything over it doesn't apply anymore. For the total amount, it doesn't apply anymore. So that's good to keep in mind. Now, there are always additional options there, here and there, variables that we can look into. If this is price range you want to look into, feel free to schedule a call with us, and we'll walk you through all the specifications that might apply to you. But these are the basics. This year, 355,000 euros, you can still apply under National Mortgage Guarantee.
Perfect, cool. Well, good to know. It can be applicable for a lot of people. Then, well, I saw that a lot of people are indeed between the age range of 24 and 34. That is good, because you guys might have heard about transfer tax. Well, to start off, what is transfer tax? That's the tax you pay when you transfer ownership from one owner to another owner. And there are a few different kinds of transfer tax in the Netherlands. I'll go through the examples in a bit, But what it comes down to is either you have a transfer tax for someone that is buying under 400K, hasn't bought a home in the Netherlands before, and is younger than 35 years old. Then there is no transfer tax. There's a transfer tax exemption to make it easier for starters on the market to actually buy a property. Then we have the regular transfer tax, which is 2% when you're buying over 400K or you're older than 35, or it's already the second home in the Netherlands, then you will be paying 2%. And then we actually have a third one. It's not mentioned here, but if you are paying or if you're buying purely for investment reasons, the transfer tax is actually 8%. Not very applicable when buying your own home to live in, but still good to know is that if you do want to buy a second home to just rent it out, your transfer tax will be a little bit higher. Well, to look at these examples, if we look on the left, we have Kate and John. They're both under 35 years old. Purchase price is exactly 400K. And it's actually the first time that they're buying a home in the Netherlands. Therefore, their transfer tax is 0%. If they were buying 390K, it would also be 0%. If they were buying at 405, then the transfer tax exemption is not in rule anymore, because the government would see it as you are able to buy over 400K, and therefore you have enough cash also to pay transfer tax. I do have to say, side note, that currently, especially in the Amsterdam area, 400K is not really the very high number anymore, but still in the general area of the Netherlands, it is a normal amount. Then in the second example, we have Kate that is 37, but John is actually under 35. He's 33 years old. Their purchase price is again 400K. Now, how does it work in that case? Is that because you are both 50% owner of the property, Kate pays 2% over her 50% share, if that makes sense. And John pays 0% over his 0% or 50% share. Therefore, in total, they pay 1% transfer tax. And on the right side, the worst case, I would say, is that they're both older than 35 years old. Purchase price is 500K. It could have been 400K as well, because if you're over 35 years old, then immediately the transfer tax exemption is gone. But in this case, the example is 500K, and then in both parties have to pay their 2% transfer tax. So if you are under 35 years old, and it's the first time you're buying a home in the Netherlands, it can be very attractive to try to find a property under 400K, because it can save you quite a lump sum of money. Good to know. We'll share these slides, of course, with you guys, as mentioned before. When going to this slide, in the bottom right, you see visit the transfer tax checker. That is actually a link to our website to fill in some details about a potential property that you'd like to buy in your specific situation, so you can see what, within a rough estimation, your transfer tax will be like. Then another question for you guys: where are you in the process? We have people from all over, and we would like to know if you've already started. Some people might have already an offer accepted, if you've chatted with an agent already, etc., etc. It's always nice to see if where in the process people are. I think the majority will be in the researching phase. But we've actually had some webinars where people already have an offer accepted. Well, then we even have one today already. So it's very cool to know that. And it can be a very added value indeed to check out this webinar, then to have some more information before you are tied to everything. But indeed, the majority is in the researching phase. Exciting to see. Cool. All right, I will end the poll, share the results, just so you can have a quick look and see what kind of people we have here, and then I'll stop sharing. So we've talked about it already a little bit, but we have two things: renting and buying. What are the pros and cons, right? I think it's important to know, because renting has pros and buying has pros, of course. We'll start off why you should rent, maybe a little bit weird in the webinar about buying a home, but does have added value. So renting your home. three things that immediately pop out that are of added value. First of all, you have flexibility, right? You normally have a 1 month notice period. You don't have a whole bank that is keeping you in debt. And it's very easy to just move and find another property. Therefore, it gives you flexibility. There are no taxes or maintenance costs. There are, I have to say, in Amsterdam, two taxes that come towards a tenant as well, which is the garbage tax or the garbage removal tax and water tax. But besides that, property tax and sewage tax is for the owner of the property. And of course, maintenance like paintwork or the maintenance on the roof or the floors or anything like that, that is all for the landlord as well. So that saves quite some money. Besides that, no big down payment is required, whereas when buying a property, you need at least 15 to 20,000 euros in savings to even be able to buy the property. When renting a property, normally just a second rent or month rent is needed to be able to move into the property. So that's a lot cheaper than moving into a purchased property. Well, that transfers a little bit into the cons of actually owning a home, right? The taxes, the maintenance, and it's much more difficult to move. You first have to sell your property, find a new property to move into. So there are a lot more strings attached on that side. Well, we hope that you're still interested in buying, of course. Otherwise, we'll have to move to another side of EHN. Then the pros of actually buying a home. Well, there are three mentioned here, but I think there are more even. But let's go to these three. First of all, stability, right? The rents will not keep rising. You know what your mortgage costs are, and you are owning your own home, and therefore you never have to move out really, unless you are unable to pay your monthly payments, of course. But there's no landlord that at one point wants to kick you out or sell the property. You are, of course, paying a monthly payment just like you are paying rent. However, with your monthly payment when owning a home, you're actually paying off your debt and therefore building up equity. You're, of course, paying a little bit of interest as well. But that is the third point is in the Netherlands where we have the mortgage interest deduction, which can save you quite some cash every year when you are doing your tax returns. So yeah, every month that you're paying, you are pretty much putting some more money back in your own pockets. Well, and then the fourth one, it's not mentioned here, but I always like to mention it, is that the market is still expected to keep rising. And if we look at the trend in the last 50 years, the house prices rise. Even if they dip a little bit, they still keep rising a bit. And therefore, it is a very good investment as well. It's a very stable investment when buying into brick, so to say. And that, like I said, translates again in the cons of renting your home, where rents will keep rising. There are no tax benefits, and every month that you pay your rent, it's pretty much throwing your money away, or at least paying off the mortgage of your landlord, and it is not putting the money back in your own pocket. So there is therefore no creation of wealth, in paying back any mortgage, but also not in building up any investment in the property itself. Robin, maybe from a financial point of view, the pros and cons of renting and buying a property.
Yeah. Obviously there are two options here, and we compared two similar properties. The interest rate is a bit higher right now than stated there, but just to give you an idea. So on the left, you can see the Gerard Douwstraat, same as on the right, really. Similar properties, pretty much the same square meters. But on the left, you can see where it's rented out at 2,250 euros per month. And on the right, you can see that there was a mortgage for 525,000 euros. Asking price and mortgage stay the same. That's really doesn't happen that much, but just to give you an idea of how it works. When you have a mortgage of 525 with an interest rate of 158, then your monthly payment of the mortgage or the mortgage payment is 1,832. You can see that stated here. Now, this monthly payment doesn't only consist of repayment of the mortgage, there's also a part of interest there. And so what you can see, the interest payment first month is 691 euros. Essentially, that's money down the drain. You don't get anything back from that interest payment apart from the tax benefit. But that is let's set that aside for a moment. And when you rent a property, that's also essentially money down the drain. So if you compare the two, on one hand you pay 2,250 euros. On the other hand, when you rent and when you buy, you pay interest of 691 euros. So that's a major difference there, of course, already. But there's a main thing, which Ludo already mentioned, of course, is the closing fees. In this situation, it's approximately 23,000 euros. So then, of course, the trick is, when do you earn back your investment there, that 23,000 euros? That's approximately 15 months. So let's round it up to 18 months. So essentially, if you live in a property for 18 months, then it already makes sense to buy instead of rent. Though I would not necessarily say that that's the moment. So really start considering buying when you are are planning to live in the Netherlands or in this property for a longer term. So let's say 3 years is kind of the bottom line. So 3, 4, 5, 6 years, then it really starts making sense to looking into buying instead of renting in this sense, because that's where you earn back these closing fees. Now, I guess if we go to the next slide, you can see here the rent over 1 year is 27,000 euros. And this is an overview of the equity that you build up, because I mentioned that you these 18,000 something euros, that is repayment plus interest that you pay. So you repay every month on a mortgage. Now, if you look at this, after 5 years in this situation, you have repaid your mortgage up to 71,000 euros already. So that means essentially that you saved 71,000 euros in 5 years, which is a good yield, of course. This does not include any increase or decrease of the property value. This is just repaying on the mortgage. This is also what you do. This is the creation of wealth that was mentioned before. There's a building up equity in your property, because essentially if you sell after 5 years and you sell it for the same amount, then you get back 71,000 euros. So that's the buildup of equity in this sense.
Yeah, perfect. It's a lot of money, so definitely worth worth thinking about. Cool. Well, let's talk a little bit about market drivers. We all know that the prices have been increasing in the last 2 years or so, and there are a few factors for that. First of all, there are quite some fiscal benefits in the Netherlands. First of all, we have the tax exemption that we were talking about before, the transfer tax exemption. There's interest rebate, which makes it a lot more attractive. There is no capital gains in the Netherlands, so everything that you earn over a market increase that is not taxed and can all be put in extra towards the 70,000 euros that we just saw in your own pocket. And we actually have something in the Netherlands called a jubelton, which is the tax-free parent donation. This is currently 100,000 euros, which your parents can tax-free donate via a property towards their children. Again, quite a lot of cash. However, good to know is that this is ending. Starting from 2023, I think this is going to be around 24,000 euros. And at the end of 2024, this is totally ending at all. So it will not be possible to do so. So if you do have parents who are thinking of doing this, or you have kids who are looking into buying a property, I would advise you to do it either this year or by the latest next year. Besides that, the interest rates, well, they're not historically low anymore, but they are still very low if you compare it to 5 to 10 years ago. They are rising up a little bit, but again, they are very much on the low side, especially if you compare it with other countries. On the other side of the story, the rents are rising. The rents are very high. It is very frustrating and very strange in my eyes that for the same property, you will be paying rent, for example, for 1,000 euros, while a mortgage would be 600 euros for it. And therefore, it is much more attractive for a lot of people to go for the mortgage option. But therefore, a lot of more people are actually looking into a home. I think the last one is the biggest, biggest reason why the prices are increasing is that there is not enough offer to supply the demand. There are a lot more people looking for a property than properties available. You see a lot of buildings being built already currently, but the thing is that if a building is being built or an apartment building is being built, everything is sold already and therefore not available on the market. The current government of the Netherlands has some very ambitious plans to fix this problem, but in the short term, I don't expect this to balance out at all. So as long as there's a lack of supply, the prices will keep increasing. Well, we talked about it a few times, closing fees, what you would need in savings before you will start actually the buying process. A few things, I'll go over them quickly. First of all, we have the transfer tax that we talked about. Generally speaking, it's 2% of the purchase price, unless you have an exemption or your partner has an exemption, or unless you're buying for investment reasons, then it will be 8%, but generally 2% of the purchase price. Then the notary will charge you a few things. Depending on where you're buying, you'll have to pay for a mortgage deed and a transfer deed between the 600 and 1100 euros. If you're buying in cash, of course, a mortgage deed is not needed, then only a transfer deed is needed. A bank or a mortgage broker will be around 1500 to 3400 euros. Typical real estate agent is between 1 to 2% of the purchase price. Again, we charge a fixed fee, so no commission there, no percentage. We'll come with those costs a little bit later on. An appraiser, where it depends on where you buy, 550 euros to 600 euros. I have to say in Amsterdam, due to a new rule, it's a little bit more expensive, more towards the 700 euros. Technical inspector, 425 euros. Interpreter is something that is obligated in the Netherlands if you do not speak the Dutch language fluently. I have to say it's nice to have as well if you're sitting at your transfer signing and you have no clue what you're signing, or you can't understand anything, because the notary is actually obligated to do everything in Dutch at that moment. So it's nice to have an interpreter there. 250 euros. It depends a little bit on what language you choose, which is pretty funny actually. If you're choosing a very rare language, something that isn't spoken by a lot of people, prices go up. If you're fluent in English, my advice is always to just go for English. It's the most cheapest language, so to say. Then a bank guarantee. Well, we'll come back a little bit. We'll come back to this a little bit later. But you have to make a deposit when buying a property. You either pay your deposit in cash, or you ask the bank to do the deposit on your behalf, and they charge you 250 euros or around 1% of the guaranteed amount to actually do this on your behalf. And then something that Robin mentioned before as well, if you want to make use of the NHG, the little bit lower interest rates and the insurance, they charge you a 0.6% fee of the mortgage amount. Then on the right side, you see a tax deductible with a question mark. Everything that is related to a mortgage in the Netherlands is actually tax deductible. So that is the mortgage deeds, the bank or the mortgage broker, the appraiser, and the NHG. Unfortunately, the government doesn't think that costs like a buying agent are something that are very necessary, and therefore haven't made it tax deductible. But I hope in the future that will change, because it's very difficult to buy and sell without, of course. So good to keep in mind that some costs are indeed tax deductible. Then, very important, some tips to actually win in the current market. As we all know that the current market is quite competitive and chaotic, it is good to know what's up. Well, first of all, value, value, value. Why is that? And this is my favorite part of the webinar always, and my favorite part of the job, actually, I have to say, is because it's a little bit of a puzzle always. To start off with, we have in the Netherlands 3 different prices, I would say. We have asking price, market value, and purchase price. Preferably, those 3 things are, of course, always the same. That would make my life a lot easier, and that would make the life of my clients a lot easier. Unfortunately, that is not the case. Looking at this house, they have listed this property for 395,000 euros. So we have asking price here, but actually, the market value is already 415,000 euros. In the Netherlands, there are no rules about at what price you have to list your property. So you can technically speaking, list a property that is valued at 450,000 euros at 100,000 euros, which of course doesn't make sense. But again, technically speaking, it is possible to do so. What we see a lot in the current market is that properties are listed between 20 to actually 50, 100,000 euros under market value. Reasons for this being is to attract more people, and more people means more viewings, but also to how do you say that, impress their the selling agents want to impress their clients a little bit more, because if they have an asking price of 395 and they sell it at 415, they can say, look at me, I was able to sell it for 25,000 euros over, or 20,000 euros over. But actually, in this example, the purchase price is not 415,000 euros, but the purchase price is 435,000 euros. Well, here we have the three prices that I mentioned before. What we see a lot is that people now say, but hey, I always have to spend 10% over asking price to be able to actually make a chance to buy the property. But actually here, the overbid shouldn't be looked from the, or seen from the perspective of the asking price, but it should be seen from the perspective of the market value. Because actually the overbid here is only, with brackets, of course, it's still quite some money, but it's only 4.8%. And that is the only thing we want to know. We want to know the market value, and knowing from a market value perspective, we actually come up with a competitive offer once we are actually in the buying process. What also happens is that a selling agent doesn't list it at 395, but they actually list it at 375. Still market value is 415, still purchase price is 435. Then all of a sudden, the overbid is 16%. However, the overbid over market value is still 4.8%. Because of this, we hear a lot of stories in the news, but also from colleagues, for example, or from friends, that now have to at least overbid 15%, at least 20% to make a shot. And this is always a question that I get from clients: how much percentage should I overbid to make a competitive offer? And it's a very difficult question, because 2 weeks ago I had a property that was listed at 550, but actually the market value was already 650. Very frustrating example, but that means that you have to overbid already 100K to actually come up with the market value. And you can imagine that the percentage there was huge. So it's a very frustrating point. But because of this, it's very, very important to know the market value. And of course, this is one of the services that we offer within the Expat Housing Network to come up with the market value. Besides that, a winning offer. What is a winning offer? Well, winning offer doesn't necessarily have to be the highest offer. It has to be a good price. Why is that? It's because if we have a financial clause in the offer saying that well, we need at least 500, from a mortgage perspective, and we make an offer of 500, but actually the value of the property is 400, then we can't even get a mortgage of 500. So they won't accept our offer, because it will fall through anyway, because the bank will not give us a mortgage of that amount. So if we make an offer of, for example, 510 and saying that we need a mortgage of 400, that will make much more sense, because the seller will know that the value is 400, and we add a little bit of own savings on top to secure it, and that will be then a competitive and good offer. Besides that, offering security to the seller, I touched it already a little bit, but offering security to the seller can come from a few different points. But most importantly, the financial clause that is in the offer. What the financial clause is, it's a clause saying that if we cannot get a certain amount of money from the bank or from a mortgage provider, or a certain amount for a mortgage towards the property, we don't have to move forward with the property or with the purchase. But if we lower the financial clause, or we take out the financial clause, you pretty much say, okay, we don't need a full mortgage, or we don't need a mortgage at all to move forward with the purchase of the property. Of course, you're still free to actually apply for a mortgage, even if you've taken out the financial clause, or if you've taken out the financial clause partially. But it just offers more security, because it means that even if you cannot get a mortgage, or if your mortgage falls through, you are technically still obligated to move forward with the purchase. But it also comes from, and that's the third point, offer the least amount of hassle. If you have a technical inspection in the offer, it pretty much says that, yeah, we make this offer, but I still want to have a technical inspection done within the property to make sure that the property is in a good state. And if there are any surprises, we can still pull out without any consequences. I do have to say this is a clause that, especially in Amsterdam, I like to keep in, because as you might know, the majority of the properties in Amsterdam are built between, well, 1850 and today. So we have a lot of properties here that are very, very old, and it can be nice to know that the property was well maintained, but also nice to know that there are no surprises that might come up in the coming years. Besides that, the fourth thing, and I see this being more and more important the last couple of months, is offering a personal touch towards the offer. And that is just by means of a simple letter with a picture of yourself, explaining who you are and why you're so attracted to the property. Currently, there are a lot of investors looking to buy properties, and a lot of people are, even though they're buying or they're selling their property and of course want to make a nice profit, they don't want to contribute to this chaotic market, and therefore don't want to sell to an investor or to someone who's just going to flip it quickly or rent it out. So if you add a letter saying, hey, we're Ludo and Robin, and we are thinking of moving in here and starting a life here, etc., etc., that will be of added value, and most likely will be chosen over a investor or someone who wants to rent it out. So that's definitely of added value. Third factor is the due diligence. Well, we have a technical inspector and we have an appraiser. I think there's a question after this. So first of all, we're going to go after that. I'm going to ask you to answer this in the chat. Do you think we should book the appraiser and the technical inspector before we make the offer or after we make the offer? And I'll just give you a few, like 30 seconds in the chat to write this down. Just to see what your guesses are. I see a lot of afters coming in. Also a before, another before. So I think it's a mixed group, but I think the majority is choosing after. Well, I won't keep the tension any longer. The majority is correct here indeed. We want to book the technical inspector after the offer is accepted. The reason for that being is because if we have to keep getting the technical inspector in while our offer might not be accepted, we are paying 425 euros every time that the inspector comes in. And if our offer is not accepted, it is a waste of money, but also a waste of a technical inspection report, because you won't be buying the property, you won't be moving in. So it is not of added value to do that. So the sweet spot of actually getting a technical inspector into the property is right after the offer is accepted. And why do we want it here? Is because generally between the offers accepted and the signing of the purchase agreement is around 1.5 weeks. And if we have the technical inspector come in here, we will have the technical report around here, and then we can review it together over here, and we know exactly in what state the property is before we sign the purchase agreement, so that if there are any surprises, if the foundation is in bad order, if the roof needs work, or if all of a sudden the floors are popping out and you need another fix of 20,000 euros, you can choose if you want to terminate the purchase, or if you want to take that upon you and move forward with the purchase. The appraisal is actually exactly the same. We'll have the appraisal in right before or right around here. The reason for that being, again, is that the appraisal happens here, and then we get the report around here, so that we have the actual market value right before we sign the purchase agreement. Because the appraisal's market value is the amount that the bank will use and will be the highest amount of mortgage that you will be able to get for this property, it is important to know that before we sign the purchase agreement. Even though my price researches are always quite spot on, I have to say, or at least very, to pat myself on the back, no, but are very, they can be quite narrow in a certain range. It's still important to know what the appraisal's point of view is on that, because if I think the market value is 550, but the appraisal or appraiser thinks it's 535, for a lot of people, that 15K difference can be a make or break. So if all of a sudden the appraisal comes back at 535, we can choose to either come up with that 15K difference in a certain way, or if that is not an option, we can choose to terminate the purchase and not move forward without any consequences. So that is why we want it after the offer is accepted, but preferably as soon as possible after the offer is actually accepted. Well, to give a little more of a broad timeline of how the buying process is going to look like. This looks very easy, but there are a lot of variables at play, and a lot can happen, of course, in the meantime, but this is what it's generally going to look like. So on the left, we'll start. Of course, we need to find properties of property that is attractive and that we want to view, eventually make an offer on. Well, in this time period is the time that we do the property document review, the price research. We make sure we know what we're buying, we know what the market value is, we know what a competitive offer is, etc., etc. Then we'll make the offer. Hopefully here it will be sitting around like this for a few hours, and then hopefully we'll get the offer accepted. Then this is the 1.5 week that we were just talking about. That is when the appraiser comes in, the technical inspector comes in to do the due diligence. Then right over here, we'll go to the notary to actually sign the purchase agreement. This is the Dutch legal document that is the legal document where you say, I will now move forward with the actual purchase of the property. From that moment, there are legal obligations, financial obligations, and also if after this period you decide to cancel the purchase, there can also be financial consequences from that side. Good thing is, however, is that you have a 3-day cooling off period from the moment that you sign the purchase agreement, so that if you sign on a Monday and you wake up on Wednesday thinking, oh my God, what did I do? You can still pull out without having those legal consequences or obligations tied to you. After those 3 days, of course, everything is binding from that moment on. From the moment that you sign the purchase agreement, that is also the moment that Robin can start applying for the mortgage. Unfortunately, we don't have pre-approved mortgages in the Netherlands, so that is why the price research is important, but that's also why it's important that you already have everything in place with Robin before we actually get the offer accepted and before we sign the purchase agreement, so that at the moment that we do sign the purchase agreement, he can press the big green mortgage button and everything can start rolling. So that would be the moment to actually start the mortgage application. Well, we've written down here that on average that takes around 4 weeks, but I keep saying this, Robin can do it much quicker, between 2 to 3 weeks. He's definitely able to do it. So that should be fine, but let's say on average 4 weeks to get this in order. Mortgage application is approved, everything will be sent to the notary so that the notary has all those documents in as well. Then between the mortgage application approval and the actual transfer and key handover, you will receive a statement of completion from the notary. This is a fancy word for final invoice. It is a invoice that has the, of course, purchase price of the property, but also the transfer tax, any municipal taxes that still have to be done. It will have the invoice from the appraiser on there, our invoice will be on there, Robin's invoice will be on there. All those costs will be on one statement of completion, final invoice, and then the notary will actually take care of making sure that the money is distributed in the correct order. It will be there on the invoice will be 2 sides, of course, things that need to be paid, but also things that have been paid already. For example, a deposit, but also the money that has been received from the bank or mortgage provider in that sense. Then we'll go to the final inspection right before we go to the notary. So if I have the notary appointment at 11 o'clock in the morning, then we'll go to a final inspection at 10 o'clock in the morning. This is just to see that the property is still in the same state as agreed upon, so that if you're thinking of buying a, or you thought you were buying a 3-bedroom apartment, that it's still a 3-bedroom apartment and that they didn't choose to take out a wall or anything like that, so that all of a sudden it's a 2-bedroom apartment. You would say that's a silly example, but actually a colleague of mine has experienced that, so that's the reason why it's very important to have that final inspection to make sure that the property is empty and in the same state as you agreed upon. Then we'll go to the notary, we'll sign the transfer deed, most important one, where actually the ownership is transferred from the seller to you, the new owner. And you'll sign the mortgage deed, where you promise to the bank to fulfill all your obligations when it comes to paying off your debt. And then, well, it's party time, of course. It's a bottle of champagne and the keys, and it's time to move into your property. Then we still have a 2-month liability term. This is a little bit of a gray area, but generally speaking, 2 months where you can go back to the sellers, and if there are any defects or any questions or anything like that, you can reach out to them. If all of a sudden something breaks off, they can still be held liable. But also for simple things like how does the oven work, that is also a moment where you can still reach out to them and just be in contact about that. So that is a little bit how the timeline works in a few sentences. Of course, when we dive into it more in detail, once actually in the buying process, it can be a little bit more complicated or a little bit more variant depending on your situation. Cool. Well, we will move on to the frequently asked questions. So besides the questions that we've received from you, we always get a few standard questions that are pretty much always the same. So we'll go through those as well. First of all, a question that we get asked a lot for you, Robin: is it possible to get a mortgage with a temporary contract or potentially as a freelancer?
Yeah, indeed, it is a question that gets asked quite frequently. A very, very short answer: yes, there are definitely possibilities there. To give you a bit of background there, let's start with the temporary contract. Obviously, banks like to have security. That's what they've built their business on. It's a risk assessment always. So then we'll see what kind of contract do you have. Is it indefinite? Then they're happy. Then they will use your total income, and we can use that income to base your mortgage calculations on. And when you have a temporary contract, it kind of depends on what the situation is. But generally, how it works is that we need an employer statement from your employer stating, hey, this and this person works here, this is the income, and so on. It's also stated on there till when your contract lasts. So what's the end date of your contract if it's temporary? But there's also another section that they can tick a box on and sign, stating, hey, if this very nice person that works with us does their job the same as they do right now, and our financial situation keeps being the same, then we have the intention to give this person an indefinite contract after this term. Now, this is an intention. It's not legally binding to your employer. It's not legally binding to you, so it doesn't hold up in court in the end. But it's sufficient to give the bank security that they will give you a mortgage as if you would have an indefinite contract. So generally, employers are willing to give this out. If not, then there are also possibilities to base your income, base a mortgage on your income, but they have to be are a bit more specialized. So again, if that applies and the specific situation applies to you, just let us know and we'll talk you through that. So that's when you have a temporary contract. It can be easily dealt with. And this is pretty black and white. So you have income and that's your mortgage. That's pretty much what it is. When you're a freelancer or an entrepreneur, so you own your own company, it works a bit differently, because then it's always based on what did happen. So what happened in the past, not what happens in the future. That's what they're trying to predict with that. Preferably, what banks have is 3 years history of your company registered in the Netherlands. So you could move your company from abroad to the Netherlands, but then they prefer to have 3 years. But it's not obligated. You don't necessarily have to have 3 years. 1 year is sufficient, but it has to be 365 days, 12 months. So a full year, you have to have history of your company being registered at the Chamber of Commerce here in the Netherlands. From that moment, we can start using your income. They want to have a bit more security, preferably, so then we cannot use the total amount of your income. When you have 2 years, we can already use a larger percentage of your income. And when you have 3 years, we can use your actual income over the average of the last 3 years. So it's always a consideration and a bit of a calculation to see what your range is there. And obviously, you do within a company, you do investment as well. So if we can argue that your financial situation is even a bit better, because in the second year you made an investment, for instance, that decreases your income, your result, of course. So if we can, that's our job as well, to translate your situation to the best of our capacity to the bank, to let them know, well, hey, it's actually okay to supply this mortgage on this person's name, because we know in the future income is expected to increase. So there are ways around that. So essentially, yes, temporary contract, definitely ways around that. Freelancer, at least one year, preferably 3, and then we're good to go.
Cool, thank you. Well, that is good news. What happens if you want to leave the country after several years? Well, this is a valid question, especially for expats. There are 3 things that pretty much can happen or will happen. First of all, of course, you can keep your home, right? But you will obviously keep your mortgage costs. You can keep it for 2 different things. Either keep it as your so-called vacation home, or if you want to come here and stay here in your current home. I think it translates a little bit into the second point, and that is renting out your home. Because that is also a possibility. However, good to keep in mind that you need permission from your bank to do so. So the banks in the Netherlands, they want to know what's going on with their collateral. And if you are renting it out, there is more a risk there, because in the Netherlands, it's very difficult to kick out your tenants. Even if you want to sell your property and your tenant doesn't want to leave, technically speaking, and if they have an indefinite contract, technically speaking, you have to sell the property with tenants in it. The tenants don't have to leave at that moment. Your property is just valued less once there are tenant in it, and therefore you need permission from your bank. Good to keep in mind also is that most likely you will need to, if you really want that permission from your bank, and you just started your mortgage, you will need to refinance the home. And there are some hooks and crannies on that, but technically speaking, it is possible. Of course, the third and the most easy option is sell your home without penalty or capital gains. If you move and you sell your property here after 5 years and you've made a nice profit via building up equity and market increase, it is very easy to sell your property again and move to your next destination. So I think that is the 3 options or 3 things that will most likely happen if you move out of the country. Well, this I think translates into the second part. I'll answer. I think this is a two-way thing, but I'll go ahead first. Can I rent out my house or a room? Well, first, I think the easiest answer is yes, it is possible. There are 2 parts of it. Renting out a room is a little bit easier than renting out a house. If you're just living with a roommate and you're asking your roommate some rent to stay in the property, generally speaking, the bank doesn't really need a heads up for that. We do advise you to put some stuff on paper so that it's not just 2 people living together on a verbal agreement, but that you also have something on paper for that. But renting out a house is a little bit more difficult. Like I said before, you'll need some approvals from your bank. And I think that I'm going to leave that to you, Robin, how that specifically works.
Sure. So indeed, renting out your room, that can be fine. Putting something on paper is very important, because what Ludo already mentioned before is if you want to sell your house and this person lives in the property for a certain period of time, you cannot make them move. So then you would have to sell your house with the person in there, and that decreases the value. Because if you look at it from your perspective as a buyer, potential buyer, and you want to buy your new dream house, and you can buy a dream house, but you have to buy the house comes with a roommate in one of the bedrooms. That's not what you want, of course. So that's something to keep in mind. So you could set up an eviction agreement, for instance, so that you say, okay, sure, you can live here for this amount per month, so on. And then, but when I am planning to sell the house, I'll give you a notice of 2-3 months, for instance, something similar like that. That's one thing, and the bank will want that as well. If you do this, and you check in with them if that's possible. You don't necessarily have to do that because it's okay, because they want to know this as well, because it's their collateral that you're renting out, and it's in their best interest also that you have this statement set up. So just then you are so safe for yourself and the bank as well. So that's something to consider. This one, renting out a room. Now, one other thing when renting out a room, the income that you get, the rental income that you get from renting out your room, to a certain extent, or from a certain amount up, is taxed as well as income that you earn. So that's also definitely something good to keep in mind, what that amount is and what amount of rent that you get for that. So that's basically renting out a room. A house, that's indeed a bit more complicated in the sense of that. No bank with a regular mortgage or a residential mortgage, if you will, no bank will allow you to rent out your entire house just for the hell of it, essentially. Only when you are sent abroad by your employer and with an end date that you definitely move back to this property and to your same job, then they are willing to do that. You always have to get agreement from the bank. If that's not the case, then you would have to refinance your mortgage. So then you would have to change your residential mortgage into an investment mortgage or a keep to let or buy to let, all different names for the same thing pretty much. But that's what has to be done. So you have to refinance your mortgage from a regular mortgage to an investment mortgage. Definitely ways to do that. By all means, again, just check in what your situation is and what the possibilities are there. And we can definitely find a way around that, or at least show you what the benefits are. Because if you're renting out your entire house, the other option is to sell. So then we'll also see, well, hey, what are different scenarios and what is the best option for you?
Cool, thank you. Well, we talked about this already a little bit, but when buying a home, a 10% deposit is needed. Or what is the 10% deposit I need to complete? So if we, I'm not sure if there's, yeah, there we go, the timeline. There we go. Okay. So when signing the purchase agreement, there are a few things that you say that you're going to do. First of all, you're going to transfer on a certain date. You're going to be paying a purchase price. And one of those things is also that you are going to be doing a deposit. The reason why a deposit is needed to add security to the sellers that you will fulfill your legal obligations that are mentioned in the purchase agreement. The purchase or the deposit is actually always 10%. It happens very rarely that this is adjusted. If you compare it to countries like the United States of America, where a bigger deposit amount is seen as a very attractive thing. In the Netherlands, deposit is just always 10% and is not used as a driver to make your offer more attractive. Generally speaking, this is something that you pay around 1 week or 2 weeks after the mortgage is approved. So this is how you'll mention it in the offer as well. So for example, mortgage approved within 3 weeks after signing the purchase agreement, and then a 10% deposit 1 or 2 weeks after the mortgage is approved. You can do two things. Either you'll pay it in cash. So if you are making an offer of 500K, you'll have to pay 50,000 euros out of own pocket as a deposit to the notary as a security deposit. But the notary, the seller, and I think the majority of the Netherlands understand that not everyone has just 50,000 euros laying around. At least I don't. So that is why you can also choose to move forward with a bank guarantee. A bank guarantee is where the bank actually makes the deposit on your behalf. Of course, nothing is free, especially financial institutions never do anything for free. So they charge you either 1% of the guaranteed amount, in this case 500 euros, or 250 euros, depending on which mortgage provider you go for. So yeah, good to keep in mind that you will be spending more while in the process of waiting for your mortgage or waiting for the transfer to happen. Of course, when we look at the statement of completion, if you have made the 50,000 euros in the example that I just said as a deposit in cash, this will be something that is mentioned in there. So at the end of the balance, you maybe need to pay transfer tax, technical inspection, appraisal, my cost, Robin's cost, etc., coming up to a total of the 20,000 euros that we mentioned before, and then you've made a deposit of 50,000 euros. So at the end, you'll get 30,000 euros back. So that is a little bit how that would work. What are your fees? Well, I think this is a very fair question, something that I see has been asked in the chat a couple of times as well. EHN has 3 services or 3 packages that we offer. We have a smart package, a complete package, and a new build package. Smart package is our most popular package, where we actually go through the whole process together with you. However, you won't see me physically. We'll see each other a lot over the Google Meets or Zoom, but I won't join you to the viewings. I won't book the viewings on your behalf, and I won't go to the third-party meetings with you. Of course, we still book it and review all the documents that come out of it. But within the complete package, it's a little bit more of a hands-on full service where we also book the viewings for you. We schedule the viewings. We attend the viewings for you. We'll also attend all the third-party meetings. So we'll go to the technical inspection, notary, final inspection, notary again. And we'll offer some after transfer support there as well. So it's a little bit more hands-on and a little bit more thorough, and you actually get to meet me, which is another gift, of course, as well. Then we have the new build package. This is for when buying a new build property. The process is a little bit different. We do have a tailored webinar for that as well, so feel free to join that if you like. But this is for when buying a new build project. So prices are a little bit different, as we of course cannot join you to a technical inspection or join you to a viewing because the property is not there yet, so there's nothing to view. So it's a mix of the smart and the complete package, coming there into a total of 2,999, complete at 3,999, and the smart at 2,499. Then Robin.
Yes, well, our fees have been decreased a bit, so that's the first happy news I can give you. Essentially refinancing, that when you already have a mortgage but you want to change it into an investment mortgage, that's pretty much the same. But when it comes to first-time home buyer, or when you buy a new home, or when you buy a buy-to-let property, so an investment property, our fixed fee is 2,999, and for that we'll guide you through the whole house hunting process as well. So again, we are not your real estate agent, we're not your buyer's agent, we're your financial specialist. So essentially what it means, we always start with the financial analysis. That's a bit differently what a bank does. They will essentially say, okay, what's approximately your income? This is approximately what you can borrow, and come back to us when you actually bought a house. We do it a bit differently. We start with an in-depth financial analysis, so we know exactly to the euro exact what your maximum mortgage range is. So therefore, you know exactly every time that you visit a property what your monthly payments are, what the input of savings would have to be. And we revise all these calculations every time that you're planning to do a viewing, or when you already did a viewing. That's something we'll leave to you. Essentially, what we want to make sure of is before you consider the bid, you already know that you can close a mortgage. So that's not a question for you. We always keep short lines of communication to make sure that you get that information soon as well, because it can be a bit crazy out there. So you might have to act quickly as well. And that's where we come in as well, to make sure that every time that you like something, that we can help you secure a mortgage. Indeed, as Ludo already mentioned, there's no pre-approval, but we come as close to that as possible because we already do the assessment of your documents before you actually put in a bid. So then we already know that you can close a mortgage with a variety of other lenders that we can see, of course. Now, that's when you buy a house for the range up to 1 million. Anything over 1 million, banks are a bit more fussy about the application, if you will. It's a large amount that you borrow then, of course. So then we have to put in more work, more time to make sure that this mortgage is approved. So that's the main reason that we charge a bit more. Then the fee is 3,799. So also there we give you a discount on that. All these fees are stated on our website as well. I will share them with you, Ludo, for the next webinar as well. So that's what we do. Our fee is tax deductible, so you get back approximately 40% after you bought this property. So just a nice additional benefit from the tax authorities. So that's what we do. We work on a no cure, no pay base, by the way. So if we cannot get you to the notary, you don't have to pay us, which I think makes sense. And we can say comfortably because we already do the analysis, so I know we can get you to the notary. No worries there.
Perfect. Cool. Thank you. Then we have our last poll of the day. I was very curious what you guys thought of the webinar, if you missed anything, or if you just want to let us know how it was. Please feel free to fill in the poll. We'll give you another minute or so to do that. Something that we can take for further webinars. Always good to see what we can improve on for the next time. With some nice scores coming in. Always nice. Alrighty. Well, we'll close it off. Thank you very much for the good scores and for sharing your feedback with us. That's always of highly added value. Cool. Then we are moving forward with the Q&A. That is going to be our colleague Philip, who's handling those. I think we've received some questions. By the way, good to keep in mind is that if your questions have already been asked or answered, and I understand that lunchtime is coming up, so in the next slide, if you'll receive it tomorrow, you can press this button down below. And I think also in the email that you'll receive is the contact details of Mr. Mortgage. So you'll be able to schedule a free call with us just to talk about your specific detailed situation. If there are any unanswered questions after this webinar or things that you'd like to talk about not in a public setting, feel free to book a call with us so we can potentially dive into your situation a little bit more deeper. All right, Philippe.
Yeah, maybe the first interesting question for Robin is the question, is it possible to get a mortgage within the probation period of a temporary contract for 3 years?
Very good question. It kind of depends on what the situation is. There are possibilities, but then if you're in your probation period, then you have to have a history of working in the Netherlands. When you come to the Netherlands all new and you start with a probation period, you first have to wait out a probation period before we can apply for a mortgage. Does not mean that you cannot look into your finances, because we can already calculate everything how it would be as soon as the probation period has ended. And you can even already start putting in bids, let's say from the 2 weeks before your probation period is ended, because you always have to wait for putting in a bid, first doing a viewing, putting in a bid, waiting for the reply, signing the purchase agreement, and as soon as the purchase agreement is signed, only then we can start our mortgage application. So then if we time it correctly, then also your probation period has ended. So that's something we can work with. And again, if you're already living in the Netherlands for a bit longer, so let's say 1, 2, maybe 3 years, then we can use your historic income also to base your mortgage on. So again, different situations there. There are possibilities, but it really depends on what your specific situation is.
Yeah, perfect. And maybe just a question to follow up on that is somebody asked, if I have now a contract of a temporary contract and I take a loan at that moment and it changes to a permanent one, does the bank changes also the interest rate then when I have a permanent contract?
Yeah, also a very good question. So no, the interest rates will not change based on what kind of income you have. They are solely based on how long you fix your interest rate for and how high of a mortgage you take out based on the value of the property. What it means, if you take out 100% of the property value as a mortgage, then there's a certain interest rate. If you only take, let's say, 85%, then the bank might lower their interest rate. That is a factor, and how long you fix your interest rate for. Those are the factors that banks use to determine the interest rate for. Your personal situation does not apply there.
Okay, perfect, thank you. Question for Ludo. Do you get access to properties before they hit Funda?
Good question, fair question. Something that we get asked a lot. It depends a little bit. I have to say, in the current market where it's so overheated and chaotic, there's not a huge added value for selling agents to share properties before they're listed on Funda, or even without listing them on Funda, just because everyone will see it on Funda anyway. There are so many people looking that if they only share it with buying agents, they might get 20, 30 responses, whereas if listing it on Funda, they might get 1,000 responses. So because of that, there's not huge added value of just sharing it with buying agents or sharing it beforehand. However, I do have to say, in specific regions of Amsterdam, but also in specific price ranges, we do get properties that are listed before, or get properties sent to us before they're listed on Funda. And therefore we have a bigger chance of getting an earlier spot to view the property. And viewing the property earlier sometimes means that we can make an offer before other people are able to even view the property. And there are a lot of sellers out there who are now selling the property because they've bought themselves another property, want to sell quickly. And if we make a good knockout offer before other people are viewing the property, it is very interesting for them to sell it already, so that they can save time by not having to do viewings and just selling to the quickest bidder, so to say. And yes, we do get properties in that manner.
Okay, thanks for the answer. Then the next one for Robin. Are you working also with expats that are non-Dutch taxpayers, as in working for the international European organizations that do not benefit from all tax return under the Dutch law?
Yeah, yes, we do. Companies like EMA, so the European Medical Agency, but also European Union, embassies and so on. That's definitely something that we do work with. And we know how to deal with that as well. We do it quite frequently, that people that don't have to pay taxes or pay tax in another country, definitely something that we work with. Under some conditions, some lenders also accept income in foreign currency. The main condition there is that you have a BSN, so a Dutch social security number, and that you're planning at least to be registered in the Netherlands as well. So, but that's kind of, that works together. When you have a BSN, you're usually planning to live in the Netherlands as well. So that's the requirement, but yes, definitely possibilities there.
Okay, perfect. Then I have a question for Ludo. Maybe I take two questions together. It's the question, where do you find the market value, or how do you define the market value?
Good question. I think something that we don't have to keep a secret, and it's a build-up of a lot of factors. But how it's generally done, we try to do pretty much exactly the same that an appraiser is going to do, right? Because the appraiser is someone who will define the market value that the bank will use. So I want to get as close to that number as possible. How the market value is defined, it is based up of the purchase price per square meter of comparable properties. Now, comparable property is a little bit of a vague term, but what it means is properties in the same area with the same square meters, with the same amount of outside space, same finishing, of course, if it has additional storage, with the same view. So to refer back to Amsterdam again, you cannot compare a property that has canal view with a property right behind it that doesn't have canal view, because canal view has such added value that this can actually, in the price per square meter, be a difference of 500 to 1,000 euros, which if in a property of 100 square meters has a very big impact, of course. So we try to find at least 3, 4, 5 properties that are comparable within these factors. We look at their price per square meter. Why price per square meter because if comparing a property of 100 square meters and a property of 90 square meters, those 10 square meters at 10,000 euros per square meter makes a big difference. So that is why we look at the price per square meter. And then besides that, we want to find a property that has been, of course, sold as close to the current date as possible. But sometimes the most comparable property hasn't been sold yesterday, but was sold in November of last year. And therefore, we have to add a little bit of a correction because the market has risen. We therefore add a correction to come up with what the current value of that property would be. Looking at those factors, we come up with a number or with a range, so to say, that we think the market value is going to be, and something that we think the bank and the appraisal will come up with. So that is, in a few sentences, I would say, how the market value is defined. It differs a little bit per city, per property, how we actually come up with it and what kind of sources we use. But generally, the comparable property method is how I would say it.
Okay, perfect. Thank you, Ludo. And then I think we have the last question for Robin. Question from Sebastiano. How can I calculate the maximum mortgage amount we can get with our salary?
A very good question, Sebastiano. Yeah, well, I know a guy that knows how to do this very well. So, and that's this one here. No, it actually is a very good question because there are online calculators, sure. But if I'm not mistaken, we even have an online calculator on our website as well. Why I'm not entirely sure is because I want to emphasize it strongly. Don't make any decision based on an online calculator. Always have a financial specialist check your specific situation, especially when it comes to a specific property, because they can have specifications that you cannot even input in an online calculator. But also your income can have different variables that we might or might not take into account to a certain extent or not. And even if you have a very basic income, an online calculator always has to be, it will always be set up in a certain set of parameters. When it comes to the interest rates amounts can even, or interest rates can even change your maximum mortgage capacity. And there are ways to maximize your mortgage capacity better than an online calculator can. So if anything, make sure that you have your financial situation checked by somebody that knows how to. An online calculator, if you use 5 different ones, you get 5 different ranges, 5 different amounts, and that can be quite a large range. So just make sure that you know what you're doing, and base your decisions on correct information. That's the best advice I can give there.
Perfect. Thank you. And then I have the last question for Ludo over here. While the technical inspection has issues and before getting a clarity if the seller will fix, can we view other properties and bid for other properties?
Good question. Well, like we said before, we want to have the technical inspection done after our offer is accepted. And while we're waiting on that report, technically speaking, we are not tied to the purchase of the property yet. Only the moment that we sign the purchase agreement is the moment that you are tied and legally tied to the purchase. However, I do have to say that we want to be as efficient as possible, meaning that if we make an offer, we want to be already 110% sure that we want to live in the property, if, of course, there are no red flags that pop out of a technical inspection, and that we only want to cancel a purchase in the moment that indeed something pops out from a technical inspection, or the appraisal is too low, or all of a sudden something changes in your personal situation. But once an offer is accepted, our goal is to actually move forward with that property, of course. And therefore, if we do other viewings while our offers are already accepted, and we make other offers while our offer is accepted, it puts us a little bit in bad daylight, because it is a little bit of a network kind of thing where selling agents, buying agents, we see each other every day, we talk with each other. So if we are making other offers while an offer is already accepted, again, it puts us a little bit in bad daylight. And most likely, if we do pull out of the offer and we want to make another offer with that same agent, there's a big chance that that agent will not accept our offer, or that seller will not accept our offer, because there is a probability that we might pull out again. So that is why I always say to my clients, before we make the offer, are you sure and happy that you would be happy to live in this property? Because once the offer is accepted, we preferably want to move forward, of course, without any doubts, other than things that come out of a report or any unforeseen things that we couldn't have known before making the offer. But to give a very technical answer, yes, at the moment, only from the moment that we sign the purchase agreement is the moment that we are tied and legally binded towards the purchase. So up until that moment, there is no official agreement, only a verbal agreement. I hope that makes sense.
Yeah, that was very clear. Okay, perfect. That were all the questions for today.
Perfect. Well, right in time. I think it is time to grab some lunch and grab some sunshine as well, and then get back to work and close some houses. Thanks very much for everyone joining today, and not just our audience, but also, of course, Philip and Robin. Like I mentioned before, if you guys do want to get in touch with us about your specific situation, feel free to book a call. You'll receive the slides and the presentation tomorrow in your email, so that you can review it again, look at it with your partner, with family, or whatever. And then we hope to speak to you guys soon. Cool.
Thank you for hosting, Ludo.
You're very, very welcome. See you guys soon, and have a wonderful day.
Have a nice day, everyone.
Bye-bye.
Bye.
Bye-bye.